All right, everyone. Well, thank you for joining us here for our Franchise Your Business webinar series. And this is a live session here. And as all of you are loading into the webinar here, just give you a quick reminder on the flow for our session today. Now, this is the current franchise sales and marketing trends. This is where we're going to go over some economic data. We'll start with some macroeconomic data and information, and then we'll slowly drill down into the small business community and into some franchising trends that we like to talk about and go through. And we will talk through this. For those of you who are new to this presentation, my name's Tom DuFore. I'm the CEO and founder of Big Sky Franchise Team. And this is a really nice overview that we like to talk about so that you can know what's happening in franchising and franchise marketing. Number one, just so you're aware, so you understand what's happening and what some of the overall sentiment might be, prospects coming through and factors that are impacting that sentiment. And then number two, some ideas or things to be thinking about how to maybe change some of, it might be some of your marketing copy or content. It might just be notifying your sales teams so that they are aware of these things happening and to maybe ask some questions related to it to see if they have concerns or worries about certain economic conditions, or instead of just concerns or fears, might be some opportunity that they see that's trending in the market. So with that being said, I will go ahead and share my screen and get this presentation started for us so that we can start talking through what some of this looks like. Hold on one moment. It will share for us. There we go. All right. And so our first chart that we like to showcase here is the Institute for Supply Management report on business that they prepare. And they prepare 3 reports to show manufacturing and what they call the Purchasing Managers Index, PMI. And as you can see for this month, it shows that the Purchasing Managers Index is at 47.7%. And so it reads in their report here, the U.S. manufacturing sector contracted in February as the manufacturing PMI registered 47.7%, which was 0.3 percentage point higher than the reading of 47.4% in January. This is the 4th month of slow contraction and continuation of a downward trend that began in June of 2022, which you can see that really almost since that peak in 2021, you see this peak number about March of 2021, just kind of this slow, steady decline. And again, manufacturing is a leading indicator showing us what might be coming down the pipe here. And it's showing that I'll zoom in a little bit here, you can see that it says the break-even line is 50% for the manufacturing break-even, and the overall economy break-even line is at 48.7%. And so it shows that we're just under that overall economy break-even line. So what does that mean? Well, it remains to be seen, but it means that the economy probably is likely to kind of hover around kind of this middle ground for a while. Is it growing? We don't know. Is it shrinking? We don't really know, kind of in this kind of flat area. So at least according to what this manufacturing report says. Now let's take a look at the services report. So for the services report, I'll zoom in here. This is the Institute for Supply Management, their services purchasing manager index, and it shows in February, the services PMI registered 55.1%, a 0.1 percentage point increase compared to the January reading of 55.2%. A reading above 50% indicates the services sector economy is generally expanding. Below 50% indicates it is generally contracting. And so I think what's worth noting here is we have these 2 reports. We have manufacturing, which is on the contracting end currently, and then we have services on the growing end currently. And I read from an economist, but from the U.S. Chamber of Commerce, he published a little summary of this, explaining that, in his opinion, he thought that the manufacturing very well may be contracting a little bit at this point because there was a lot of consumption that happened over the course of the last 3 years due through the whole COVID scenario, and services shrunk and contracted during that time period. So you had during that prior time frame, you had growing manufacturing and then shrinking services. And he said now there's some pent up demand for services that have kind of been delayed for a service economy that is now coming back out. And so his thought was that was part of the driver. I thought that's an interesting point worth noting. So either way, it's showing services are growing, manufacturing is contracting. And then here we have the hospital PMI. This is their newest report. So hospital, this is again from the Institute for Supply Management. And this is the Hospital Purchasing Managers Index. And it says economic activity in the hospital subsector grew in February for the 33rd consecutive month, say the nation's hospital supply executives in the latest hospital ISM report on business. The hospital PMI registered 53.5% in February, 1 percentage point increase from the January reading of 52.5%. So when we take a look at this, we can see in this chart off on our graph here, we can see that in 2021, it was spike growth, heavy growth on, if you can kind of imagine a trend line in there. And then in 2022, right around February of 2022, we saw it really crash down. And then it was just kind of a yo-yo, kind of up and down for 2022. And we'll see what happens here in 2023. But, judging by the first 3 months here, first couple months, I should say, for February and January, we'll see what comes out of March, but for February and January, the numbers were pretty similar to one another. We'll see if March provides another similar number. Maybe we'll kind of have a little bit of a smoothing out, so it's less extreme this year. We'll see what the numbers end up saying. Point being that the hospital PMI is still growing. So from some broad economic indicators here, we're seeing some growth still occurring. Now, let's take a look at the this is the U.S. unemployment rate. So let's take a look at the unemployment rate. So for last month, for February, it was at 3.6%. January was 3.4%. So it's been consistently low, below 4% for the last year, and looks like it's still low. It looks like we had a little uptick last month, but overall unemployment is low here. And then this is and by the way, these reports are from tradingeconomics.com from the unemployment rate. And this next report, which is the U.S. inflation rate, this is from tradingeconomics.com for U.S. inflation. And it shows that for February, it was a 6% inflation rate. And tradingeconomics.com is gathering their information from the U.S. Bureau of Labor Statistics. So overall, if you look at the chart here, it goes back to April of 2022. And then you can see that in June of 2022 seems to be the peak over the course of the last 12 months at 9.1%. And then it's slowly declining. I will say, while the number's declining, it's moving in the right direction. That's a good thing. But we still need to remember that this 6% in February was up 6% from last February. And let me see if I can zoom out to the 5-year here. So February of last year looked like that was somewhere around 8%. So it's 6% over the 8% growth from last year. So just to kind of help put things in perspective there. So still some high inflation in terms of what's going on. The good news is that it appears to be curtailing and on its way down. So let's hope that we continue to see that decline here over the next several months. So a positive sign that hopefully the worst of the inflation is behind us. The next here is to take just a quick look at the index of consumer sentiment. This is a survey of consumers by the University of Michigan, and they've been doing this survey for consumer sentiment for decades. And it just gives a highlight to say, what are consumers thinking? What are they feeling? What's kind of going on? And they're assessing and taking a look at this. So a 100 on this scale is equal to 1966, a reading for consumer sentiment in 1966. And at the end of 2022, it was the lowest numbers that they had ever recorded, I believe. And you can see this dip here in 1979. It's kind of interesting to see because in 1979, we were in the thick of heavy inflationary period at that time as well. And same in 2022. Now we see consumer sentiment has bounced back up somewhere in around maybe 65%, judging off of this here. I'll click back to see if it gives me an exact figure, but it's still nice to see that things are trending upward here for consumer sentiment. And just in general, the sentiment I'm hearing from our clients and prospective clients in the small business community is that things seem favorable at the local level of doing business. So I think that that is a good thing as well. Um, the other chart we like to look through here is the overall, let's see, coronavirus. Sorry for some of these ads that pop up on these charts here. But we have, this is through the worldometers, worldometers.info coronavirus, and this is for the US. And this is showing the total number of daily new cases. And the blue line is the 7-day moving average. So you can see that the moving average has been trending down, and it looks like it's almost at the lowest number it's been uh, really in years, that it's been down this low since 2 years ago. So the 7-day moving average is at 12,432 cases. And then if we take a look at number of deaths, US deaths, here's the 7-day moving average in this brown line. And you can see deaths are on a decline right now, which is great to see. 134 deaths over for a daily 7-day moving average, to see that trend coming down. So again, you can see that this is really lowered and stabilized there. So that's just a quick overview on the coronavirus. Just it's worth noting, and as I've shared with several other folks this week, yesterday was that Monday. If you remember, 3 years ago, Monday, March 16th, when it seemed everything started shutting down, sports leagues closing, all the heavy stuff that really started happening across the country on a nationally, was that Monday, March 16th. And so just pose as a reflection point as we were talking about that, as just a quick thing to maybe think about for your own journey over the course of the last 3 years, and think about how things have changed, your business has changed, how you've changed the way you do things, think about things, and just reflect on the journey you've made through that, because everyone had their own trials and tribulations that they experienced during that window. So I just think it's an important note to have a little bit of reflection on that. So I will go ahead and share my screen back, but just take a quick moment to think about some of that. Okay, next up is the number of new business applications. This is released by the U.S. Census Bureau, and it showcases every month. This just came out on March 10th, and it showed the total number of new business applications applied for nationally. So in February of 2023, there were 429,800 new U.S. business applications, which was almost a 2% increase over January of 2023. And you can see on this chart on the right side, it shows since 2011, the total, a graph showcasing the total number of new business applications throughout the year. And I just like to point out that right before the COVID hit in 2020, it was just approaching, for 2018, 2019, into 2020, it was just right at or right under 300,000 new business applications. And then right about mid 2020, it jumped over 400,000 applications. In fact, the initial surge was over 500,000. But you can see that it has, for the most part, sustained over 400,000 new business applications. That's over a 30, over a third, over a 33% increase over what it was before COVID. So just if you're unsure if new business startup is on the mind of folks, it is. They're thinking about it. These new business applications, I think, reflect that. Even if this takes into account existing business owners, that kind of growth has to come from new people coming into business ownership and starting new businesses. So keep that in mind for your marketing and for your sales. People have starting new businesses on their mind. So uh, don't think that they're not serious about buying your franchise if they're inquiring, or if you're a franchise broker and you're talking to your candidates. Don't think that someone who goes quiet for a little while is not actually serious or very or interested in, because chances are they probably are. There's just something that came up. Okay, next up on our list here is the Small Business Startup Sentiment Index. This is released by Business Venture or by Franchise Ventures, excuse me. And this survey was done between the February 23rd and February 28th of 2023, where they survey up and coming new business startups. So I'll zoom in a little if you're watching this live, or on our recording if you watch this a little later when we publish this up on YouTube. But you will see here that the startup sentiment has been pretty consistent for the last 3 months. Over 59% of aspiring business owners are more likely to start their business now than they were 3 months ago. And 20% fewer prospects see funding as getting harder in the next 3 months. There are a couple key highlights here. So I'll scroll down to a few things that we like to look at and point out. One of those items here is what seems to be the challenge. What are candidates most concerned about as they're thinking about starting their business? Okay, what's the biggest factor contributing to you not being sure if you want to start or ready to start your business? And I'll zoom in on this here. But you can see it's 69.9%. So almost 70% of respondents said that funding or access to credit is one of their biggest factors into starting a new business. And so my proposition or recommendation to you, the franchisor or franchise broker, franchise salespeople, make sure you have some options available for your candidates that are coming through and talking with you and coming through your pipeline. You need to have a solution for them to talk to. There are lots of great third-party lending organizations in the franchise community that you can reach out to, and that can help support you with it. Companies like Fran Fund and Tenet Financial and Guidant and lots of others that exist out there that have been around in franchising for a while that you can reach out to and see if they can provide a solution. Certainly SBA funding, helping the candidate go to their local bank, maybe sorting out a partnership with a family member or a close friend could be an option for them. The second highest concern or factor that was contributing to whether or not someone would start a business this month is economic climate, and that's at 39.8%. So almost 40% of respondents said the economic climate. So that means 6 out of 10 don't think it's a big issue, a big factor for them. So you've got about 7 out of 10 respondents where access to credit and funding, it's a big deal. 4 out of 10 are saying it's the economic climate. And then the third largest category here is just other, about 26%. So roughly 1 out of 4 saying some other thing. It's not the stock market. It's not political changes. It's not regulatory. It's not tax law. It's not the economy. It's not funding. It's something else. So if you know 1 out of 4, it's something else, you might want to ask. And so anyway, just a quick conversation for you to think about for these 2 leaders in this category today is: number 1, have a plan for helping support your candidates with funding. Number 2, be willing, and I suggest you talk about the economy and what's going on with the economy, and reference some of the data or information in here in terms of what's happening. And as most things, when the economy is in a down cycle, the up cycle is not that far away. By the time we realize we're in the midst of a recession, we're kind of on our way out because it's quarterly data we look at, right? 2 quarters of um, negative GDP or negative GDP growth shows that it indicates a recession. Well, by the time we kind of figure that out, we could already be on our way out of a recession. So just things to be thinking about and talking with your candidates about. Let me zoom out a little bit. Okay, I think this is an interesting question. How does the pandemic affect your interest in business ownership? 29% said it has no impact. 28% said it boosts their interest in controlling their own destiny. Roughly 20% said it makes them favor a business that would be resistant to that kind of thing. 37.6% said it reduces the amount of capital I have to invest. And 11.8% said I've decided to put my business startup on hold for now. So what I find interesting is roughly about just over 10% of respondents said that they are no longer interested in opening a business because of the pandemic. But 37.6, so more than a third of respondents said that the or their availability of capital or the amount of money they have to invest has been reduced. So again, tying back to what we were just looking at above here for the finance side, when we look at that, it shows that, oh, it shows that about 70% right here say that access to credit's a big concern for them. So that came up twice here as a reference point. So just something I think that's worth noting. One other thing that 44.1% of aspiring owners are leaving a full-time job. So that's the candidate pool. So about 44.1% are full-time. 15.1% of folks are part-time employees. 20.4% are freelance or consultants, and 20.4% are current business owners. So it's interesting to note about if we include the freelancers and current business owners, they account for 40% franchise of business candidates, folks that are thinking about starting a new business of some kind. So 6 out of 10 are not. The other 4 out of 10 are some kind of existing business owner. So maybe you have some language or content that ties into that potential business owner or freelancer that's looking to change careers, maybe add a new investment, maybe sorting out some language that could tie into that. Whether you're a broker that's talking to candidates or a franchise development agency. Okay, here is the age. How old are the folks that are looking at buying a franchise right now? What percentage makeup do people fall into? Well, we can see Gen Z accounts for about 5.4% of potential buyers. Millennials are at 21.5%. Gen Xers are at 53.8%. And baby boomers are at 19.4%. So we're continuing to see the baby boomer percentage decline. The Gen X percentage has continued to grow, albeit a little slower. Millennials are growing. And then Gen Zs are just starting to get into the buying of franchises. All right, let's talk about an interesting report that just came out 2 days ago on March 15th. And this was from franchiseinsights.com. And they ran a study and the headline says, prospects give feedback on improving the franchise sales process. And the question they asked was, how would you rate your overall experience with the franchises you inquired about? So 12.4% said that they were very satisfied with the overall experience. 36.3% said that they were satisfied. 38.9% said that they were neither satisfied nor dissatisfied or unsatisfied. And then you have unsatisfied at 5.3% and very unsatisfied at 7.1%. So I think what's worth noting here is that most people are having a neutral or a positive experience in the franchise sales process. So good job, pat on the back. Good job, franchise development, franchise sales teams. Well done. I think your greatest opportunity here is that almost 40% of the respondents, almost 4 out of 10, said that they were not satisfied nor unsatisfied. So to me, that provides a great opportunity for you to look at that to say, how can we get those 4 out of 10 that are kind of in that middle, right? They gave you a 3 out of 5. Um, you've got some great, about half of the respondents said that they're very satisfied or satisfied. So they're happy. You did a good job. They've given you a 4 or 5, but about 50% of the respondents did. But you've got about 40% of respondents that are in the middle. So it's an opportunity for you to improve on. So I think that's worth noting out of this report. The last thing that I want to show is just the franchise. Oh, hold on 1 second. Let me pull this screen up for us. That I always like showcasing before we go for the day is just where are people, which categories are people looking into when they're thinking about buying a franchise? And let's see what those trends are showing. Just waiting for the screen to load. All right, I will share my screen again and we will be back. So this is going to showcase where are the categories that people are most interested in. So home services, and the categories we're talking about, these categories of businesses have received the most inquiries over the last 90 days. Okay. And so this is by franchiseinsights.com. And it's owned by Franchise Ventures, which is the largest collection of franchise lead generators in the country, maybe even in the world. So they have tons of data that they're pulling from. And this is going to show home services here is listed as number one. Again, 20.6% of all inquiries, franchise inquiries, were for home services. Senior and healthcare is way up at 14.9%. Business services, 14.8%. Cleaning and maintenance is up at 13.3%. And food and restaurant at 8.5% for the top 5. The balance of the top 10 include financial services at 5.2%, child related at 4.6%, education at 3.9%, retail at 2.6%, and pet services in the top 10 at 2.4%. So I think that these are all very telling signs and great opportunities. What's interesting to me is food and restaurant is the number one growth category for last month, or so we look, or for the last 90 days. So food and restaurant grew 286.3%. And by the way, if you're new to franchising or not familiar with it, when food does well, it's a good thing for franchising as a whole. So it's great to see growth there in food and restaurant. Health and fitness is up at 215.9% growth. Sports and recreation, 203.3%, and automotive at 175.4% for the top 5 there. So that is what I had to share and talk about today. Do we have any questions or comments or ideas or anything to share from our audience today? Just feel free to type in the chat box and Q&A, raise your hand. I can unmute you before we wrap up our presentation. All right. Well, I'm not seeing any questions come through. Before we go, I did want to remind all of you that we do have a podcast called Multiply Your Success. We're coming up on episode 150. We do one every single week. So we're coming up on our 3-year anniversary, pretty short order here. And we have awesome guests. It's geared toward that successful entrepreneur and emerging franchise brand to give you some ideas, suggestions to help grow your business from where you are to continue to help you multiply your success. This podcast or this webinar will become available on our Franchise Your Business podcast, which will get released here shortly, as well as on our YouTube channel at Big Sky Franchise Team on YouTube. And happy St. Patrick's Day, everyone. Happy St. Patrick's Day. Hope you're wearing your green. Hope you find pot of gold at the end of a rainbow today. And may you have a great day and enjoy your weekend, everyone. Thank you so much for being here.